Hello, my name is True Demon, and I'm the Devil Stockbroker. Thank you so much for tuning in to watch this video. Before we begin, please understand I'm not a financial advisor, and none of the following content is financial advice. The following content is for educational and entertainment purposes only. Trading stock carries inherent risk, and you should always respect and understand your own personal risks when considering any investment. Please don't take what I say as gospel, and please do not trade based on the information that I receive and share through my content. Thank you so much, and have a hell of a time in the stock market. Hello, everybody. My name is True Demon, and I'm the Devil Stockbroker. We had quite a day in the markets today, so I'm just going to do a little quick recap here on where we're currently at with our plays. Sorry that I haven't been able to address any of the latest TA or do a stream today, but duty calls. That being said, got some interesting developments here. So MULN's been moving pretty strongly in each successive day, and it especially does pretty well in morning pre-market. And it's been pretty consistent about establishing new gains, and so far that has remained true for the past several trading weeks. I gotta say, I'm really impressed. I didn't expect this slow movement upwards, but it just keeps on rocking. So currently, what we are looking at is a bear channel, which would normally be it's called a bear channel because they tend to break down. And so far, it looks like MULN has broken below the floor of that channel just based on this very short time frame of pre-market, or rather regular session trading hours and aftermarket hours. So far, it's still holding up in post-market trading, however, and still looking pretty strong. The short exempts data has not slowed up at all. Given the volatility that we've seen with MULN, it's really not surprising that we're seeing a lot of short exempts, but it's still quite an excessive amount, especially given the size of its float originally. Now that it is reached a high of $4.18, this thing can start to get really crazy and out of hand. The delivery of options from the Friday close is due at the morning bell tomorrow, so we can expect individual shares to be delivered finally after exercising their call options, which expired on Friday for those that remain. At the moment, the short total volume is pretty low, and the 5-day SMA delta rate is continuously rising. It's above 15% every single day now, pretty much. So that's that is a sign of continuous pressure, just not letting up. The on the one hand, that means that it could come back down at any point, and on the other, anybody who is currently still short on MULN could be getting squeezed, especially if that is a market maker. Moving over to Ortex, one thing to be very careful of here is the amount of security lending volume, and the constant increase of shares on loan could be an indicator of two possible things. One, it could be a indicator that hedge funds and large institutions are borrowing up shares in order to prepare to short at the what they perceive to be the top. The other possibility is that it could be market makers continuously trying to delay delivery of their positions, and continuously using short exempts without taking their borrows, in an effort to avoid having to deliver and close their failures to deliver by buying more shares. This could either work in our favor as retail investors, or it could work against us, and that's the problem here is the uncertainty with it. And I'm not here to spread FUD. I'm just here to tell you what I'm seeing here in the data. And currently, it would appear that the short interest is slowly tracking upward, as I would assume day trading shorts are seeing a top in the trend and deciding to enter into a position. But the simple fact is that we just don't know. At the moment, the current number of shares on loan is 16.25 million with a utilization of 100%, but the actual short interest has only risen by about 200,000 shares by contrast. So there's a lot more shares on loan than there are actually sold short right now. Um, and for me, that kind of makes me nervous to add anything else to my long position. Um, Full disclosure, I have both a long and a short position. I have long calls currently, and I also have some protective puts just to hedge against volatility. And I'm basically neutral either way. If the if the share price goes up, then I make money, and if the share price goes down, I make money. So um, the only reason why I tell you that is for transparency. It's not that I don't think that the stock could go up, and I'm hoping that it does still because my long position it has a lot more upside to it, um, and my protective short position was completely like it was super cheap. It's like it was a super small, super cheap short position just to cover my ass in case things go south. But you know that's just how I trade. As far as what the data is telling me, it's pretty uncertain. The days to cover is still really low because we've got a ton of volume. The stock is continuously rising, which is great, but there's just not a lot of short interest in total. The short interest of free float is, albeit pretty small, compared to what it was um, back in mid-February. However, it has grown pretty uh, pretty massively, about 10 times from about 460,000 shares short to over 4.6 million. So there's still a lot of shorts that are trapped in their position. But even if they do get squeezed out, it's not certain how many of them there would be that would create enough buying pressure to push the stock up any more than retail already is. So all I'm trying to say here is that currently it's just pure buying that is pushing the price up right now, which is a good thing. It keeps the price moving up, and it's fantastic for it is fantastic for retail, who I'm sure you guys are just making money hand over fist on this stock. But I'm just letting everybody to know that you just got to be careful because there is the potential for a rug pull here. So um, you know at this point the stock has run a really long way, and I am so proud and amazed of how far we came. The fact that this speculative play has worked out for retail, that this was a small but clear victory. And I'm proud of that accomplishment. I'm glad that we were able to spot this trade and that it's worked out for so many people. I'm going to go ahead and come back to a few other plays that we're currently looking at here at Hell's Trading Floor, just to kind of give everybody a quick peek at what we've been tracking and looking for at the moment. BBIG is one of the big ones. So BBIG is a stock that we have been playing for quite a long time. We've been in this trade for a long while. Um, at the moment, our biggest win so far is that BBIG has broken out of this falling wedge, very clear falling wedge pattern, as you can see based off of this pattern here. We had that run up in mid January that got rejected up at $5.45, and it kind of dropped off back into the mid threes and consolidated a little bit before it came back down. And now we've got a clear breakout. So we have two tops for resistance on this falling wedge. So this move that we made early in the morning today was clear breakout, and it did not fill the gap. So it was a very solid hold. And since it's been consolidating at that $3 level, which it had previously been rejected at, it's kind of no surprise. That is also a fib level here based off of the Fibonacci retracement that was drawn here on the long term. So what we're expecting to occur is that due to the Cryptide news, is there will be continuous buying of BBIG, might push it up to its previous Fibonacci resistance levels around $4. It may take us a while to get there, but given that we've got some big volatility and we've also got this this Fibonacci timeline here, which is this is drawn based off of significant moments in the stock's movement, drawn on a Fibonacci timeline. Just mainly periods of volatility where the where lows and highs connected to each other, and now we're coming up to another point where a high is expected. This is BBIG's Ortex chart, and as you can see, it's had a huge amount of failures to deliver in the past, and it's been on the threshold list multiple times. Currently, it is not on the threshold list, but I'd be willing to wager that the failures to deliver are probably going to take another big spike. This is one stock that just like when it decides it wants to move, it moves by leaps and bounds. And there's not necessarily any predictors, but it usually comes after these big clear breakouts, and it may gap down in the short term, but man, when BBIG wants to move, there's no stopping it. So what I'm currently looking at is the estimated short interest, which as you can see, even throughout its big volatility periods when it squeezed big time, these were mostly gamma squeezes caused by a series of call options, very significant number of call options running in the money, and throughout those big moving periods, short interest would usually peak near the top and then fall off after it came down for a while. And then after shorts felt confident that they had control, they would re-enter their positions and keep hammering it for a while. So that's been consistently what's happened with BBIG each time it made one of those big moves. And at the moment, there's a very huge number of shorts in it. At the peak, there was 37.5 million shorts currently in the position, and that was back on looks like the 31st of January. Not quite as many right now, but there's still 28.09 million that are short on BBIG, and they're honestly pretty close to the bottom, I would say. BBIG has very rarely broken down below 2, and it never stayed there for very long. Just to further illustrate my point, at this point, when BBIG was most heavily shorted on the 17th of February, there was a bit of consolidation and downtrend in the price, and suddenly the shorts started exiting their positions, and you can see the average days on loan dropped big time along with the number of shorts. So that's a signal that a lot of shorts were shuffling out of their positions, and then some new shorts were coming in. It dropped the average days on loan all the way from 56 days down to 26 days, so less than a month on average. And even now we're still at about 30 days average on loan. So counting back from March 18th, if we go back to whatever the price was on February 18th, we can assume that that is roughly the average price that shorts may be in. And that's probably pretty fair to say. Somewhere between $2.50 and $4 is where the majority of shorts are going to be. Some of the late shorts will be down here closer to $3 and $2. So these are the shorts that are most in danger and also the most over leveraged when it comes to how exposed they are. So if the price starts to move back up to $4, then those shorts that are down at the $2 to $3 level are going to feel the pressure first, and they're going to be incentivized to exit their positions. The security lending volume has dropped off pretty much to nothing compared to the big volatility periods. So at the moment, it looks like not many shorts are moving just yet, but if the price starts to trend up against them in a big way, then we're going to see that change. Total number of shares on loan is roughly about what it was in mid-November, so no real change there. At the moment, full up on utilization, and I would expect that there's going to be limited ammunition for shorts to use against retail. And if the Cryptide dividend comes sooner rather than later, then that dividend will need to be paid out by shorts who have borrowed and sold shares. They will owe their lenders a tied share, so that will further put pressure on them to get out. If we take a look at BBIG's options chain, we see that there's a huge amount of focus on the April 14th expirations, especially on the $4 and the $5 strikes. Those two strikes combined make up about 8% of the total options chain, and just have a significant amount of interest. If we compare it to our ScourgeBot's short squeeze, gamma squeeze analysis chart, we can see that between now and April 29th, there are currently about 35% of the float is on the options chain in total, but the first 26.3% is only up till the $7 strikes. So if BBIG were to suddenly make a huge move to the upside before the 29th of April, such that the price was above $7 by that time, then it would basically mean that 26% of the float would be in the money. And therefore, anybody who had sold those calls would be obligated to deliver those shares by the time of expiration. Seeing as up to $5 is the biggest share of that, and that's only $2 away from where BBIG's price is currently sitting at. That seems well within the realm of possibility. So that creates a huge opportunity for retail to jump in while the stock is hot, get in early on some cheap options, and purchase shares below $3, and essentially just push the shorts over a cliff. Seeing as more than 92% of the options that are currently on the chain are calls, it's overwhelmingly bullish for BBIG. There's really nothing standing in the way of BBIG making its next move to the upside. And given how volatile it's been in the past, I would not be surprised if BBIG easily recaptured $5 within the next couple of trading weeks, especially if retail comes in with their buy hold mentality and continues to push the price up throughout each trading week. Just one more time looking at the technicals, we can see that the biggest area for BBIG right now is to break over that $3.60 level. It's currently consolidating just at $3.11, but that 360 level is the big area of resistance for it between now and May. The next area of resistance beyond that, once you get past these two fib levels here, would be $5. It came up to about $5 and even reached as high as $5.50 for a brief period of time before it consolidated and got smacked back down. Main reason why I'm expecting BBIG to make a move is this big volume ramp that occurred here. It was consolidating pretty much to the downside all throughout this period, and now as soon as there's a sign of upside coming into it for more than 2 trading days, sudden volatility pop and had driven the price up over $3 literally overnight. That's a sign that whales are stepping in, and since we've broken out of this falling wedge here, it's no coincidence that the break of the falling wedge occurred here and then the buyer stepped in. Definitely a sign that volatility is coming back. Let's take a look at Progenity, because Progenity popped back up onto its under our radar after it broke this downtrend here. As you can see, Progenity's been in kind of a falling channel here. You could say it's a falling wedge, but it's more like a channel. The base of $1 was retested. It was more like $1.20, $1.10, but it was retested 4 times in the past 2 months. January 24th, February 24th, March 8th, and then again on March 14th, and it's been making a big move to the upside. Volatility and volume started coming into the stock as it made this big move, and it gapped up in pre-market today, opened up at $1.70 or $1.69. Nice. And it was consolidating through most of the day, but then got rug pulled and dropped back down. I actually added a little bit more to my position late in the day since the rug got pulled, and I'm happily sitting on a very nice basket of options, leaps, and shares. I'm entirely long on this stock for the long term. Most of you guys who have been watching should know that by now. Um, why is this volume coming into the stock? Well, we've got earnings coming up for starters, and it's expected to be good because Progenity has repeatedly reported that it's cut a lot of its expenses and cut a lot of the fat out of its budget. So now it's a very lean company that's focused on manufacturing. They've geared up their manufacturing and production service, getting ready to go to market with their latest product. And possibly the most exciting news is that they have since the past week released a new patent, which was approved by the Patent and Trademarks Office. That file has now been made public, so that news is beginning to circulate, and Progenity has acknowledged the patent right before earnings. And wouldn't you know it, that it has everything to do with precludia. This article, which was published in the Journal of Pharmaceutical and Biomedical Analysis, was it made a mention of precludia, which is Progenity's product, and I want to give a special thanks to Brad Mitchell, also known as Opti Financial News on Twitter. He called this out and made mention that this was the catalyst for what caused Progenity to make its big 15% move in the last couple of days. It's been a fantastic move for Progenity, seeing its stock lifted back up away from $1, and now that volatility has pushed a whole bunch of options onto the chain. There's some bullish upside going for Progenity right now, but the fact that this information comes out just before their earnings couldn't be better timing, because at the moment with this with the stock moving and now more attention getting onto it, on top of having their patent released on precludia, and also we do know that Progenity is holding on to its metrics and the statistical analysis data for precludia, that preclinical trial data that we've been waiting on. They have that data, they just have not released it yet, and they're obligated to release it before the end of March, according to their 8K filings, that they have been holding off on making that announcement and making any final statements until such a time as they're able to confirm the findings. But they have given themselves a deadline for the end of March. So that's coming up right around the corner, and now their earnings is coming up here in just a matter of days. So all of these are excellent signs, and it's good timing for the stock. And right now, it's at its lowest price that it's been since September of 2021. Just speaking on some of the fundamentals and the technical analysis that Brad's done. He gives a 2-week price forecast of $3 to $6, which I think $6 in the next 2 weeks might be a little bit ambitious, but it's not impossible. However, the 10 to 12-year price forecast, this one I do agree with. I do believe that Progenity can easily be trading at triple or even quadruple digits. The the stock for the long term can do very well because it's not just this precludia product that they've created that is now getting ready to go to market. They have a fundamentally unique and ambitious project of creating a smart pill which is able to administer intravenous medicine through the stomach that somebody can safely swallow and have critical life-saving medicine delivered directly to them without needing to go and receive an injection from a doctor. And that is ultimately the future. We've been waiting, like it's the technology of science fiction that we've been waiting for. And as soon as that comes out, as soon as it's licensed to various different pharmaceutical providers and hospital systems and licensed out, it will enter multiple multi-billion dollar markets for medicine. And it's going to fundamentally change the field of internal medicine forever. So that they are the first newcomer to create this product and realize it um, is so amazing, and I feel really fortunate to be in on so early on this stock. This is one that I plan to be invested in for the long term. Basically, this is my retirement portfolio right here. So that's my 2 cents on that you didn't ask for. Like BBIG, Progenity is heavily shorted with 13% of its current free float short against it. That amounts to roughly 17.5 million shares short on Progenity. The utilization is completely maxed out at 100%, and it's been that way for the past week. So in terms of the shorts against it, they're fully loaded up, but they're also in at the bottom, which is always a bad sign for shorts. The average days on loan right now is sitting at around 30. So for the average short, it can only be anywhere from $2 down to $1 as the best case scenario. Unless the short, like it's probably going to be a very small number of shorts that got in way earlier than that, and by now they should have covered in order to take profit on their position if they were above that. So if Progenity starts to move now, it's going to leave a whole bunch of them captured and trapped at the bottom, and start putting pressure on them to close their positions. With the utilization being maxed out like this, there's going to be very little room for shorts to maneuver. They're not going to have a lot of ammunition to throw against the stock, and there's even more of a of a bull case ahead for the options chain, which you can look at the breakdown here, showing that 85% of all options open on Progenity right now are calls. Looking at the current heat map, we can see that April 14th, just like BBIG, significant date. Heavily weighted options with a massive amount of calls set to go in the money above $3. If Progenity makes that push to get it rolling past $1.50, then this does create quite a significant gamma ramp that can cause more and more options to run in the money throughout the rest of the month. I'll take a quick look at the Finra data just because it is relevant here. Progenity is currently, there's not a whole lot of short exempts against it, although the heat map shows it's significant relative to the past week. It's quite a small number of short exempts compared to what it has been in the past. But we do see that the moving average, the 5-day moving average delta rate of Progenity is tracking upward, and it's now currently above 5% for the first time. So we have that utilization of 100%. The short exempt ratio has been tapping on 3%, which is good, but not quite that level that we need for it to trigger the second squeeze signal. However, this 5-day simple moving average delta rate being above 5%, that is a good sign. If we can get that to be consistently above 5%, if the price continues to rise and trend upward throughout the remaining trading weeks, between now and April 14th, then good chance that we see pressure on the shorts, which will put pressure on market makers, which will cause gamma and gamma and short squeeze potential to be realized. So as far as Progenity's near future, it's still early yet. So This is for me an opportunity to buy more shares. If you're not an options trader, shares are it's the safest way to invest in a company like this. Just be be aware that it's a small cap biopharma play. It's a newcomer to the entire field, and it's these are risky plays when it comes to biotech. So just bear that in mind and respect your risk. Nothing that I've said here is financial advice. It's just informing you to the best that I can, so that you can do your own research and due diligence and make the best decision for yourself. All that being said, I'm extremely bullish. Progenity is looking strong. It's bounced off of the bottom multiple times. It's got a double bottom just in the last trading week, and it rebounded very quickly, and it's setting up for a nice cup and handle here as well. So all good signs. And then just to wrap things up, I'll go over all of the other remaining plays that we're currently looking at. Of course, we have GameStop, which it is making some nice upward trends. It's finally moving to the upside, getting ready to try to get back above $100 right now. The OBV is a little bit on the downside at the moment, so there is some divergence to the downside that may not be realized, but it's still moving through a valley at the moment. But if GameStop can get back above that psychological level of 100, which is also a heavy resistance here, then I would expect it to start to make a recapture of 110, 120. AMC still in its falling wedge. It hasn't really made an attempt to break down or out of it just yet. It's currently now trading below this resistance at $16. We'll see if it continues to get lower than this, but they've tried to knock it down below $14 multiple times and have had a really hard time doing it. So at some point, something has to give. The pressure it's not going to be easy for them to keep this pressure up for the long term. Even as the price is slowly trending downward, the OBV is staying more or less flat. And now with this recent move to the upside, we see a inverse head and shoulders showing up on the OBV itself, and we can see that also reflected here on the price chart. So if you can see this little head and shoulders right here with the head below my cross and the shoulders here on this horizontal line. So the neckline is right at this resistance here. So this is perfectly on the neckline. If we see AMC break above $16, then I'm betting that we see AMC make another move to the upside, which would likely see rejection at $20 and a breakdown to retest this support before breaking out, if at all. So that would actually work out to be a larger head and shoulders pattern, with $19.50 or $20 thereabouts being the neckline here. So this shoulder, the neck, and the head, and then retest, create another shoulder, and then break out. So if we do see this continuation, then what we can hope for is a breakout before the next earnings date of mid-May. IRNT is another one that we're playing currently. This one has got me pretty excited. The OBV has diverged to the bullish. The OBV has diverged to the upside, and it's broken out of the short-term falling wedge after consolidating and breaking out of a bull channel. This zone of demand has proven pretty effective, and as soon as it broke out, it got rejected off of this level here at $7. Pushed back down, but it only very briefly re-entered that zone of demand before it got bought back up. So this is a clear breakout here. I'm expecting to retest this $5 resistance and break through the next two levels of resistance at 7 and 9.45. IRNT is a big volatile mover, and it was way oversold. Like, the OBV makes no sense when you look at this price chart. There's no reason why the OBV here should be above where it was here. To me, it doesn't make sense. And IRNT is about ready to announce earnings. There's a lot of bullish volume pushing the price up. There's obvious signs of accumulation going on here. So IRNT, I'm fully in on this stock between April 14th and May 20th calls. I'm feeling nice and comfortable in my position, and I'm targeting for this stock to retest its previous highs. ALZN is another one that we're looking at just based off of ScourgeBot. Scourge called this out to us on the 24th of February after it made two divergence indicators. The first one being on the 16th of February, the second on the 24th, and then since then it's re-signaled on the 14th of March and the 16th of March, and now we're breaking out to the upside, creating this inverse head and shoulders on the daily chart. Go ahead and set this up so that we'll do the 4-hour chart. So here we've got a shoulder, head, and getting ready to create another shoulder. It looks like if it does come back down, it'll come back down to about $1 before it makes its next move upward. But we shall see. GILT is another one. Got a triple bottom here with a bull pennant. Well, not really a bull pennant. There's not been a big upswing just yet. Just it's a wedge, but we've got a wedge within a wedge, and at the moment it's looking to break out of this resistance here at around 830, 850. If we see this one break out, then we can expect some upside up to maybe $9 before it runs into some trouble. IDEX is another EV play that we're currently looking at. If you look at its previous history and patterns, it usually creates these long wedges with big volatility spikes that kind of come up out of nowhere. And each time that it's done that, it'll slowly sell off and then consolidate into a more consistent area before another volatility pop occurs. And it always seems to come right after a breakout of a falling wedge or a wedge of some kind. And right now we're in this consolidation zone right here below $1. As long as they don't get on the NASDAQ shit list for being below the $1 threshold, then I don't expect them to stay down here for very long. This is actually a really nice company. They've got they're one of the largest sellers of EV motorcycles and mopeds in the Far East. They're a huge provider out there on the in the Eastern Hemisphere. And they've got some pretty sexy electric bikes that are really popular out there, and they're quite affordable as well, which is part of the reason why they do so well. There is another earnings that's going to be coming up pretty soon here. There has not been any earnings reports for the past years up until the 19th of May back in 2021, and now that they're consistently reporting their earnings, they're slowly getting more towards neutral earnings on their reports, and they're reporting more and more revenue surprises lately. So overall, there's a good outlook here, and with new volume and options interest coming into this stock, this is a pretty nice long play. This is a good time to buy shares, I feel like. So if I were well, I mean, I am buying shares and I'm also buying call options, but for really distant expirations. So, like January 2023, 24 leaps, things like that. And then two more volatility plays. Excella. This one's in a bit of a a bull channel because they tend to break upward, and it broke out very briefly before selling back down to the base, and now it's consolidated down here. So we'll see what it does next, but this one's heavily shorted. So after reporting a really pretty decent earnings and new volatility coming into the stock here after the big earnings euphoria and the big sell-off that happened around that time, this consolidation seems pretty uncanny for the stock. If we see it start to retest this 550, 55-cent level, and test the upper bounds of this current downward channel, then we may see it complete a breakout on the daily chart. And then finally, we have maps. This was called out by one of our analysts, Verde, he pointed out this big falling wedge on the daily chart for maps. There was a bit of volatility, and it had reported a good earnings with a 3,000% surprise on its earnings reported, as well as a $3 million surprise on its revenue. The this nice wedge here that we see within the falling wedge is looking pretty swanky, and since it broke out of this, it's continued to show strength. So now, after having broken out of both of these wedges, and now finding it's running into some problems here at the previous resistance, which started back here at around $7.25. I'm looking to see it break out of here and then retest this gap. There's a gap between 975 and 1125. So there's a nice opportunity for a quick reversal here, and a opportunity for this stock to complete a much larger cup and handle on its daily chart. So be on the lookout for these. That's going to do it for this update video. I hope you enjoyed, and good luck in the following trading week, and have a hell of a time in the markets.